Hi everyone. Welcome to my channel, InfoCraze. Today, we're going to dive into the world of accounting, specifically focusing on outstanding, accrued and prepaid expenses. Sometimes, these terms and the corresponding accounting entries may be little confusing when questions are asked in a job interview or in any examination. By the end of this video, you'll have a clear understanding of what they are and how they impact the company's financial statements. In the realm of accounting, understanding the nuances of expenses is crucial for maintaining accurate financial records and making informed business decisions. Properly managing outstanding, accrued, and prepaid expenses ensures that financial statements provide a true and fair view of the company's financial position and performance. An outstanding expense is an expense that has been incurred by a company during an accounting period, but has not been paid as of the end of that period. Thus, an outstanding expense is an expense which is incurred and due, but has not been paid yet. In the company's balance sheet, outstanding expenses are recorded as liabilities, because they represent obligations that the company owes and will need to settle in the future. These liabilities are usually categorized under current liabilities since they are expected to be paid within a relatively short period, typically within a year. Let's understand this with an example. Imagine, you have taken an office space on rent for your business starting January 2024. At the end of the month, on the 31st of January 2024, you receive an invoice from the vendor towards rent for that month, payment for which is yet to be done. Until you make payment for January 2024, the rent expense is considered as outstanding in the books of account. Thus, the accounting entry to be passed on the 31st of January 2024 would be debit rent expense account and credit accounts payable, that is, vendor's account or rent payable account. The payment entry that needs to be passed later, while making the payment to the vendor from bank, would be debit accounts payable, that is, vendor's account or rent payable account, and credit bank account. An accrued expense refers to an expense that has been incurred, but not yet due for payment. This means that the company owes money for the expense, even though the payment hasn't been made yet. Some people use the term outstanding expense and accrued expense interchangeably. While both are similar in nature, they are not quite the same. There is a thin line of difference between the two. While both these types of expenses have been incurred, the difference lies in when the payment is due. Unlike outstanding expenses, accrued expenses have not been invoiced or billed by the supplier yet. Accrued expenses are recorded in the company's financial statements to accurately reflect its financial position. Let's understand this with an example. Suppose a company hires a construction worker named John for 30 days, starting from the 25th of January 2024 to the 23rd of February 2024, to work on a project at a labor charge of $100 per day. Assume that the payment will fall due after the completion of 30 days' work. As the accounting period ends on the last day of each month, the company will have an accrued expense of $700, as on the 31st of January 2024, which is incurred but not yet due. This is for the expense incurred by the company towards the services availed from John in first 7 days, during the 25th of January 2024 to the 31st of January 2024. Accounting entry to be passed on the 31st of January 2024 will be debit labor expenses account $700 and credit accrued liabilities account $700. While making payment by the company from its bank to John after 30 days of work is completed, the company will debit accrued liabilities account $700 and credit bank account $700 for the portion of accrued liabilities booked in January 2024. For rest of the amount of $2,300, the company will debit the labor expenses and credit bank account. A prepaid expense is an advance payment made for goods or services that will be received in the future. Essentially, it's an expenditure for which the benefit will be realized over time in the future accounting periods. Prepaid expenses are recorded as assets on a company's balance sheet until the benefit is realized. Let's understand this with an example. Imagine, you pay for an annual insurance premium of $12,000 upfront from your bank account to cover your business for 12 months. Since you have paid for the coverage in advance, the expense is recorded as a prepaid expense until it's utilized throughout the period. The accounting entry would be Debit prepaid insurance account $12,000 and credit bank account $12,000. The prepaid insurance asset would gradually be expensed each month or each accounting period, depending on the policy's coverage duration and the company's accounting practices. The accounting entry to be passed would be debit insurance expenses and credit prepaid insurance account. This ensures that the expense is recognized in the periods in which the insurance coverage is utilized, following the matching principle of accounting. Prepaid expenses are recognized as expenses on the income statement over the period in which the related goods or services are consumed or utilized. This process is known as amortization or recognition of expense over time. The portion of the prepaid expense that is consumed during each accounting period is expensed, and the remaining balance of the prepaid expense decreases accordingly. Thus, to conclude, understanding of outstanding expenses, accrued expenses, and prepaid expenses is crucial for maintaining accurate financial records and ensuring proper financial management within a company. With these, we come to an end of this video. If you find this video useful, please like and share the same with your friends. Also, subscribe to my channel for many more interesting videos in the field of finance and accounts. You can also check my videos on interview question and answers for accountant jobs and accounting basics. Thanks for watching.